Hope you're all doing well. Welcome to the weekly market talk with Dan. The weekly market talk will be every Wednesday at 1 Central, 2 Eastern, and we'll look at opportunities, talk about the market, answer any questions you have. One thing just for your information, if you go to the front page of Sheridan Mentoring, we've started this over the last couple weeks. We want to invite you to experience all the love and great teaching at Sheridan Mentoring as we try to teach you the craft and give you a lot of good trading ideas. So we have $49 for your first month, which would be our new basic program, which would basically give you about 2 to 3 sessions a day with myself and Mark Fenton on very practical teaching, lots of trade ideas. I probably put on at least 3 live trades a week. And so this is a great opportunity to experience the Sheridan Mentoring experience and to come in for a month and experience it. Great teaching, great trade ideas, and so this is a great opportunity. $49. You could just go to the front page and do that. So I want to invite you to do that. We've been, I think this week alone, I put on just in the sessions I did at least 3 live trades, and they're all doing well. One we already took off for a profit. The other 2 are up. But again, it's a good learning experience, and what a wonderful opportunity to come in and see what we have to offer for you. All right, let's move on. So a couple things to look at. As you guys know, the way we kind of look at the world is Sheridan Mentoring. Where does everything fit in? We have a spec part of the portfolio, income, and long portfolio. Long portfolio is kind of the view of an investor. These would be more strategies like a covered right, cash secured put, long stock, maybe a put credit spread. You get the idea. The view of an investor, hey, I like this stock over time. I like the market over time. Kind of the retirement type mentality, right? And so this part of, if we just took a $20,000 options portfolio, and again, it could be 50, it could be 100, it could be 2,000. Right now, with the market at all-time highs and VIX around 13, I'd probably be maybe 20 to 25% in this part of the portfolio. Why? If your broker called you up and said, hey, I have a brilliant idea. The SPX is almost at 3,100. I had a pizza at 2 in the morning. Now is the time to get 100% long. What would you do? What would you do? Would you do it? Is he right? That is a tough question. Get a new broker? Yeah. So you'd want to be lower percentage there. Income part of the portfolio, whereas this is you're wearing the hat of an investor, this is more range-bound trades based on probability and decay. But unlike, I'm not just putting these on when the VIX is at a high level. I don't care what the VIX is. I want to put these on every week, every month, consistently, right? If the volatility is low, they do calendars that benefit if the volatility is going up, or strategies. If the volatility is a little bit higher, strategies that would benefit if the volatility goes lower. But I'm not just trading when the volatility is high. No, I don't think that's the way to do it. So income strategies would be more iron condors, butterflies, calendars. We may do double diagonals, but these are, I call them the 4 cousins of income trading, kind of range bound. Right now, I'd probably be about 30%. I might be a little bit higher, but I want to give it another week since we broke out of that 31 or the 30-30 level in SPX. This is price chart. I want to make sure, it seems like we're forming a bit of a range here, but I want to get a little bit more time on this range. If we want income trades, we want a range. So it normally would be up probably a 50, but I'm about 30 now. I just want to see if we have a bit of a range here. And then spec is you wake up in the morning like most of you, and this is where we get in trouble as traders. You wake up in the morning with a what? With an, begins with an O, an opinion, right? Tim said a hangover. No, opinion, right? Based on technicals or whatever you get your information, you think the market's going up or down, and you put a directional play on, right? So that's the world. And spec might be 10% if you get better. You might be bigger. Right now, right, if we take 10%, 30%, and even 25% for long portfolio, that might cash of 35%. And again, if we stay range bound over the next week, then I would up this to probably 50. But this would stay where it's at. Anyways, a little bit on this overall perspective. So now we might look at today. I'm not sure. We may look at we'll look at an income trade, and then I may look at something out of here. But again, the idea is that you set your options business up as a business. That's a novel word. And you're going to allocate X amount to these, and you're going to determine your strategies based on price level, VIX, ATR, and standard deviation. So those are some of the criteria I use to choose the strategies. RM says, what is your number one indicator that tells you which strategy to buy or sell? VIX is the number one indicator, which tells me the strategy. But then again, you still have to get into the duration. That's why I look at all these indicators and put them together, because what if it tells you the strategy, right, but the wrong duration? Dan, what do you mean? Let me give you an example of RM's point. How many people were living back last Christmas Eve? Were any of you living back last Christmas Eve? Do you remember that? The market last Christmas Eve, we were down 20%. Anybody remember that? All right, so what's the point? Was volatilities high at that point? Were volatility levels high at that point as we were going down? So let me ask you a question. Volatility's high. Sell it! Sell it! Well, what if you did 7 to 15-day trades at that high volatility? Do you think that was a pleasant experience, right? So yes, at a high volatility, you think, okay, I should do strategies that would benefit if the volatility came down, like butterflies and iron condors. But what if you picked the wrong duration? What if you were in 7-day trades with the market dropping like that? Would you have got hurt? Yes or no? Say yes. Yes. But what if, as the market was going down and volatilities were climbing, you say, well, high volatilities, maybe an iron condor or a butterfly, yes, but what if you did a novel idea and went out 50 days instead of 7? Would that have been a warmer blanket in the winter to withstand some of this nonsense? Yes or no? Yeah. So can you just say, what is your number one indicator for a butterfly? What is your... Well, it's a little more complicated than that. A little more complicated. Because when things really kick, that's why we look at standard deviation, ATR, VIX, blah, blah, blah. We look at 3, 4, 5 indicators because, number one, all butterflies are, we trade 3, 4, 5 different types of butterflies in our community, but you have to match up. The duration has to fit what's going on in the market. Anyways. So what are something I would look at today from the income, and then we'll look at spec or long portfolio. Well, why don't we look at maybe spec or long portfolio first? Let's look at something I was looking at, Costco. What do you think of Costco? Any opinions? I go there and it's always crowded, always crowded. What does the price chart look to you? And again, if I'm looking to do a trade now, this is a 1-year price chart. It's okay what has happened, at the beginning of the year. But if I'm looking at a trade now, wouldn't it seem reasonable to look at the price activity over the last 2 months? Wouldn't it? Wouldn't this be a little more important than this if I'm looking to put a trade on now? So what do you think of the price chart the last 2 months in Costco? How would you describe it? How would you describe the price chart action? Yeah, range bound, flat, sideways, generally trending higher. Yeah, trending very slowly higher, right? So you might even say range bound, trending upward at about 1 mile an hour. And if you look at the last 2 months, the price range over the last 2 months has been between near 285 to 305, kind of. You agree? Now, Robert brought up a good point. Should we be careful of Black Friday, right? And that's a good point. Earnings are on 12/2, so those are definitely some things that could hurt the beauty of this range boundness, right? Those are two legitimate things. Earnings on December 2nd, a Black Friday, and we might be closer, but let's talk about this. All right. So how about if we did an income trade that avoided Black Friday and earnings? Might that be more interesting? How about if we did a trade that would avoid Black Friday or earnings? Dan, you say, what do you mean? Let's take a look. So we would need an expiration that may be expired. In other words, earnings is on 12/2, right? So earnings are going to come out during the D6 expiration, right? So we'll stay away from there because you can see, and the way you know, let me show you something. If I put this so if you look at the volatilities, you can see here's the at-the-money calls. You can see here's the volatility of the at-the-money call that expires Nov 22 in 9 days. Here's the volatility of the at-the-money call that expires in 16 days, Nov 29. Here's the volatility of the at-the-money call that expires in 23 days, D6. And then here's the volatility of the calls that expire in 30 days, D13. Now, let me bring up a point. When did you say earnings were? On 12/2? I wonder if that confirmed, because this is telling me the earnings. Do you see what I'm saying here? These volatilities are about the same, and then you make a 6-point jump here. So according to this, this is telling me earnings are this week of December 13th. When you say, okay, Chris made a good point. So in other words, two important principles here. When you see earnings on Thinkorswim or another brokerage firm, is that 100%? Understand something. Until it's confirmed, all Thinkorswim is doing or another brokerage firm, they're posting what it usually is, an estimate. Do you agree? When I look at the volatilities here, this is real money bidding up these options. It's telling you the earnings are just the week of December 13th, of Friday, December 13th, and it makes sense now. Earnings are 12/12. Let me tell you what I used to do when I was a specialist in the CBOE. Did I believe when I looked at a play? And it's not that Thinkorswim's they're not lying. They just put up an estimate, right? But you don't know if it's confirmed. So what do? What would I do, right? Here's what I do. All right, let me show you what I would do, and this you can do too. Until it's confirmed, right? Where do you think would be the best place to find out Costco's earnings are confirmed? Where do you think would be the best place? Hint, Costco. Hint. Do you think Costco would know before Thinkorswim when their earnings are going to be confirmed? Crazy thought. Yes. Here, so I'd go Costco, investor relations. Especially if you're going to put real money down. Costco, investor relations. Let's just see what we find here. All right, so it gives you all this beautiful information here. You get where I'm getting at. It should show earnings. Where will it show earnings? Event calendar. In other words, they have to confirm it. Usually they don't confirm it until 2 weeks, right? They don't confirm it until 2 weeks, usually before. So here, and thank you, Chris Stockton, put some information there. Webcasts and presentations, what does it say? Now, interesting. This says 10/3, Q4 2019 earnings call. That's interesting, isn't it? Maybe that's where did you get the 12th? I mean, the 12th looks like it's the 12th because of the volatilities. Look on event calendar. Oh, you're right. Yeah, on the 12th, right? So what I used to do, because we had huge positions on in these things when I was in the pits, I would call the investor relations department, right? And I got developing a relationship with them until they said it was confirmed. I wouldn't do it. But again, what I'm saying is 99% of the time, when you look at price chart, if the volatility pops in 1 month, you can bet that's probably 90%. That's when the earnings are going to come out. Agree? So, to make a long story short, right, as my Irish father or grandmother would say, we just mentioned we want to avoid earnings, so I'll stay out of this expiration, and we want to avoid, well, I don't think Black Monday because they're really not pumping up the volatilities because Black Friday, right? Is that the Friday after Thanksgiving? That would be this one, right? But we'd be out of it before then because Black Friday, they're not going to know how Black Friday is until Black Friday happens. Agree? So I don't mind going in Nov 29 in 16 days. Or if you wanted to avoid the Friday, do the Nov 22. I'll tell you what, I'll do a short-term trade. Let's go. Everybody would agree Nov 22, which is a week from Friday, would avoid both events. Do you agree? Nov 22 would avoid both events. Do you agree? Yes. What's going to be our biggest problem doing a range-bound trade November 22 with 9 days to go? It's going to be price movement. If the market were to do something crazy, Costco would react, right? But let's look at this. For a range-bound trade, I'm going to come in here. How about sell an iron condor? Bob Montgomery said, Thinkorswim is mentioning maybe a 6.3 projected price range over the next 9 days. Is that correct? 6 to 7? Is that correct? That's the expectation. But let me ask you a question. If I put an iron condor on with 9 days to go, do I have to stay in it the whole 9 days? Am I allowed under the laws of the Geneva Convention and the Illinois State Constitution, can I get out of this trade in 3 days? Yes or no? So if I get out of this trade in 3 days, is the expected range 6 points? Yes or no? No. So what I'm saying is expected ranges are okay, but if I'm only going to be in this 3 days, what would I want? Right? If I'm going to put this trade on, today's Wednesday, I'm going to look to be out by maybe Friday or Monday, but what am I looking at? I want a standard deviation for 3 days. Agree? Let me say that again in Spanish and a little Swahili. If I'm doing a 9-day trade and I'm going to stay in it 3 days, am I that concerned about the expected range over 9 days? No. Right? So let's put the trade on, and then I'll expand my thinking a little bit. Let me just throw in an iron condor type trade. So I'm going to sell the 310 calls, about $7 out of the money, and I'm going to sell the 295 puts. We'll start there. Let me just play with this a little bit. That's good enough. But here's the point. So here's the trade. This is 88-cent credit. I'm going to put it at 90. We'll leave it at 87. So here's the trade. Costco is at $303. And we're going to sell the 310 calls. And we're going to sell the 295 puts. So you got about 8 points either way, 7 or 8 points. As long as we're between this area, we make money, right? And the credit's going for around 88 cents. I'm going to make it 90 cents just because I could do math better on 90 than 88, right? What's my risk on this trade? These are 5 wide credit spreads. So my risk is $500 less 90 would be $410 per one contract. So if I'm looking to make, the most I could make would be $90 divided by 410. So the potential return, the most I can make at expiration is 21%, and that's over 9 days. Agree? 21%, if I take the credit divided by my risk, about 21%. Now, but if I want to make everything, I've got to hold it 9 days, right? Well, what if I only want to stay in this trade 3 days, right? So today's the 13th. What if I want to stay in it? What if I want to get out of it the 15th? I'm just using this as an illustration. Do you see how this is your expiration, how the graph looks like, and here's the P&L in 9 days. And this is what your graph will look like in 3 days. Does everybody see that? So you can see this purple line says if we haven't moved much on Friday's date, we'd only be up $20. I'll have to go to probably Monday's date. Monday's date would be the 18th, right? So you can see Monday's date, right? On Monday's date, we'd have a chance to make around $50, right? You see that? And $50 on capital of 410 would be about 12%, right? So that might be a plan trying to sell it. If I were to do Costco, I haven't done Costco in a while, an iron condor like 90 bucks, 89, it's trading at 89 cents. I'd probably put it in at 90 and just let it sit there, see if I get it, right? Confirm and send. Let's see, just put it one time. So you can see, not a bad price. I'm trying to sell it for 90. And it's the mid price, probably get it. So if you see the trade, let me just put this back to today. Not just a little example, but it's the thought process. Today's Wednesday. I look to be out of this by Monday. Does that make sense? Again, this is one contract. Every one I do would be $410. If I did this, I might do this 10 times. If I did it 10 times, right? If I did this 10 times, the way I'd look at this 10 times would be, if I do it 10 times, then I'm looking to make, right, 10 times, my capital would be if I do this for a 90 credit, right, and my risk is 410, so if I did it 10 times, right, I'd have 4,100 of capital into it. And if I'm trying to make out of this 90-cent credit, I want to make 50 cents of it, so I'm trying to buy it back for a 40-cent debit. Right? And so if I did it 10 times, and I made 50 bucks on each one, 50 times 500, then I'd make $500 on my investment of $4,100. That would be my goal here. And that would be a yield of 50 divided by 41, 500 divided by 4,100, be about 12%, right? And I might even go for, if I sell it at 90, I'd probably buy it back for 50. So I'd make 40 times 10 is $400 on capital of 4,100. That'd be closer to 10%. Agree? And even with, you think about commissions these days at Thinkorswim, I think they charge you 65 cents a contract right now. So even if I made $400 divided by 4,100, that'd be 9.7%, right? We'll see how much does commissions eat out of that. If I do 40 contracts in and 10, 10, 10, 10, 40 in and 40 out, that'd be 80 contracts times 65 cents a contract. Agree? 80 times 65, it'd be $52 in commissions. Agree? So without commissions, I'd be 9.7%. With commissions, it'd be $400 minus 52 is 348. 348 divided by 4,100. So with commissions, it would be $348 divided by 4,100. That'd be 8.4%, right? In what, 4 days? Now, is there any possibility this trade could go against us? I'm joking. Is there any possibility the market could move a lot and Costco could go against us? So I just have to have a max loss. Again, I'm putting these trades on every week over, the assumption is if I'm playing Costco, like an iron, let's say I'm putting on 9-day iron condor in Costco. The assumption is I'm doing it every week. So I'm going to put 50 of these things on. 50 every week. 50 weeks. So I'm going to win a lot more than I lose. As long as my losses aren't much more than my winners, I'm going to have a heck of a return, right? So if I'm looking to make 8%, I don't want to lose much more than 10%, right? Or, I'm sorry, if I'm making 10%, I don't want to lose much more than 10 or 12%. And 10 or 12% of 4,100 is what? 4,100 times 12% be almost, 4,100 times 12% be about 50 bucks, right? So if this credit that I sell for 90 cents, we already know we're going to buy it back at probably 50-cent debit, right? So if I sell it for a 90-cent credit, I'll buy it 50-cent debit. But if that 90-cent credit goes up over $1.40, right, I'd buy it back. And I would just buy the bad side. If we were going up, I'd buy the call side. If we were going down, I'd buy the put side. But again, it's just risk management. So this is just a very simple plan. But anyways, any questions on this? I didn't plan on talking about this today. This would be an example of an iron condor in a stock. Petru says, any trade ideas for Cisco earnings tonight? No, I don't. I haven't looked at it. And I would spend 10 minutes looking at it, Petru, but I got to run here. But I normally would. One thing, if there's something, the next weekly trade talk is next Wednesday. If Monday or Tuesday of next week there's a strategy you want to look at, or you have a question on something you want me to cover in the weekly trade talk, or you want, hey, Dan, look at Cisco, if there's something coming up or you want me to look at something, just send me an email and I'll try to cover it. Why did I decide iron condor? Mainly because it was range bound. That's one of the reasons I cut. And the implied volatilities were kind of in the mid range here. I mean, I could have gone a butterfly or a calendar, but I saw the volatilities were up a little bit, so I was looking at a iron condor. All right, folks. Well, have a great evening. I'll see you next Wednesday. I would encourage you, check out our website and come in and enjoy 2-3 sessions every day where we're teaching you, and you can get a month of our basic program for $47. I'd strongly encourage you. I think you get a lot out of that. Folks, have a wonderful day, and we will see you later. Thank you.